Hi dear traders, market sentiment is still shaped by the same factors. Traders are still speculating on the possible moderation in the pace of rate hikes by the Federal Reserve. This time the US dollar has found support from a new catalyst, events in China. Nationwide protests against the official policy of the zero COVID tolerance revived demand for the US dollar as a safe haven asset. Now let's discuss what other events could influence investors' sentiment in the last 2 days of the trading week. Let's discuss what's going on in China. The COVID resurgence and the bitter response from the population to tight economic restrictions are the culprit for turbulence which is sure to take its toll on the economic performance. As I pointed out earlier, investors are seeking refuge in safe haven assets. At the same time, market participants are pricing in the revised stance of Beijing. China's authorities could make allowance for the public rage and soften lockdown measures. Nevertheless, business activity certainly weakened in November, which is proven by experts of the Market Economics Research Group. Their survey will be on tap as usual on the first day of each month, this time on December 1. According to the consensus, the PMI reflecting trends in small and medium-sized factories in China went deeper into the negative territory to 48.9 from 49.2. The news might reinforce their global risk-on mood. For instance, the Australian dollar was heard being the currency of the major supplier of commodities to the Chinese industry. Another highly anticipated report, which is due on September 1st, is personal spending, which is an accurate gauge of the US economic conditions. Importantly, consumer spending generates almost 2/3 of the US gross domestic product. Hence, steady growth in consumer activity gives investors hope that the US economy is defying the negative recession forecast. On the flip side, another indicator, the manufacturing PMI by the Institute for Supply Management, will arouse doubts among investors. Analysts expect the index to slip below the threshold level of 50 points, separating expansion from contraction. In one of the latest reports, market participants found out a significant decline in durable goods orders. Besides, business activity in the factory sector was dented by lower hiring and uncertain demand for consumer goods. The ISM manufacturing PMI was a bit better than expected in the previous report for October. Let's see if the actual reading will surpass the pessimistic forecast. Markets await the data of crucial importance on December 2nd. As usual, the US Department of Labor reports on unemployment and jobless rates on the first Friday each month. The ADP employment report, which is due today, will shed light on the employment trend in the US private sector. This report prefaces the government data and reveals common trends. Meanwhile, we may look into the forecast, which suggests a slowdown in employment growth. Investors are certainly aware that the Federal Reserve evaluates economic conditions on the grounds of the metrics on the labor market. Indeed, a healthy labor market is a cornerstone of consumers' well-being, which is in turn one of the major driving forces of the US economy. Thus, in case the forecast of a cooling labor market comes true, the US central bank is likely to have an argument for moderating the pace of monetary tightening. This is bearish for the US dollar. Canada will also provide a similar report on its labor market. The difference is that the forecast for Canada is not just negative but dismal. The domestic economy is expected to add a modest 10,500 people in November, whereas the employment growth in October was 10 times bigger. Some analysts suggest even lower figures. All in all, such gloomy expectations do not inspire optimism and shake the Canadian dollar's confidence. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest news. Subscribe to our channel and see you soon.